Hi everyone, good morning and welcome to today's morning report. Chart appraisals on Monday the 6th of March with me, Rich Perry, market analyst at Handset Markets. We've got fairly sort of cautious and negative start to a certain extent on the equity markets. You've had over the weekend into the close on Friday, you had sort of comments from Janet Yellen which were again hawkish leaning, pretty much continuing this trend of Fed speakers we've had in the last sort of few weeks that are all but setting us up for a March rate hike. Really, Yellen basically said that a rate hike was going to happen unless the data sort of suggested that it wasn't on course. But the Fed seems to still think that the data is going to be on trend, and if that's the case, then it's going to hike rates in March. And subsequently, the dollar had some strange moves actually. There was initially a move to the upside on the dollar and also the treasury yields, but then that corrected back into the close, and sort of it almost as though that the market had sort of pulled back on the fact that it already priced in the possibility for this rate hike now, and that was just sort of confirming it really. So slight sort of bit of a consolidation there, but we've had a slight sort of moved this morning as the markets have become a little bit more safe haven orientated on the back of this sort of missile tests from North Korea that landed just outside Japan, which generally will give the Chinese and the Japanese a bit of an issue, and it sort of just puts a little bit of nervousness into the mindset of traders. And subsequently we're seeing sort of dollar strength, yes, but generally yen strength being the main factor today. Also treasury was mildly lower again, so it's playing into that safe haven theme. Now not a great deal of market movement in terms of economic data today. We've got the factory orders for the States. It's at 3 o'clock. It's expected to be a 1% gain on the month, so that would be just really confirming the recent improvement we've seen in factory orders on the year-on-year data, but other than that, nothing really to move markets around. So we're fairly well set in this sort of mindset at the moment. Now my chart today is the Aussie dollar. Now what we have had is the Aussie dollar breaking lower. It sort of obviously had been holding up very strongly through January and February, despite the fact that the US dollar had been strengthening. The Aussie dollar had been holding up very well, but on Thursday last week we had a sharp downside break. I think that this changes the outlook now, because you look at the momentum indicators which have topped out. The MACD line is certainly accelerating lower, and the stochastics RSI below 60. It all sort of points towards selling into a bit of strength now, but only on a confirmed move. I think this becomes a bearish trade really on a break of 75 figure. 75 figure, which is a long-term pivot line actually on the Aussie. 75 figure time and time again has been used as a pivot, so that is your sort of medium-term key support, and you break below that, I think you're looking a lot more corrective. But for now, you're sort of trading into more of a range phase really. But I think having broken that sort of run of higher lows and rolling over on the momentum and sort of moving averages starting to roll over again, I think this sort of starts to feed a bit more, in the very least, into a ranging trade. But ultimately it could turn into a corrective move if you certainly break below 75 figure. So below 76, that was a near-term pivot, sort of almost topped out below that. But you got a 76 figure up towards 76.45 as sort of 45 ticks worth of resistance. I think I'd be playing that as, and it'd be interesting to see if that sort of is the area at which you start to see the next selling taking place. Momentum indicators on the hourly have already unwound to 60 on the RSI, and sort of back to around to a sort of neutral on the MACD lines. So it's already sort of getting to the level at which, or the stage at which, you sort of start to think about whether this is becoming into a selling opportunity, as I said, around that sort of 76 figure resistance area. of this breakdown. So you could start to see the market sort of trading below 76 to 76.45, and then above 75 figure, and then sort of 75 figure, as I said, becomes your key support near term. So that is the sort of my take on this chart at the moment, that if you break below 75 figure, you could sort of really open the downside, but for now that is your key support, being that long-term pivot. And I wish you good luck in your trading on the Aussie dollar today, and I'll speak to you later. Thank you.